Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Think back on 2025, the returns we've had in equities and fixed income and commodities, and think about 2026, where are some opportunities. And where you really want to start is in technology. We can do that with Dan Ives. He's a senior tech analyst and head of technology research at Wedbush Securities. Dan, thanks for being in our studio.
Great to be here as always.
All right. Let's set us up for 2026 in tech. I mean, there's Consumer Electronics shows in a couple of weeks in Vegas. I'm sure you're going to be there. Huge presence there. Use my name if you go to Bellagio. They'll take care of you.
I know. You say Sweeney, it always gets you the best table.
It does. It opens doors.
It opens doors.
It opens, yeah.
What are you thinking about 2026 here for AI?
Look, I mean, obviously, it starts off at CES, where I think that Jensen's speech on that Monday is going to set the tone setter, right? Yep. In terms of autonomous, robotics, physical AI. But look, I think the reality is that despite a lot of the haters and the bears in hibernation mode, it is going to be, I think, just a booming year for AI and tech stocks, especially in the first half of the year. I think investors are underestimating specifically on software. Like we talk about not just Palantir, but MongoDB, Snowflake, a lot of the infrastructure plays, Nebius, and some of those others. It's about the derivative plays, the second, third, fourth derivatives, CrowdStrike, cybersecurity, Palo Alto. And I think what we're going to see play out, Microsoft, Oracle. Look, I think we sit here a year from now, Oracle is the name that I think investors are just throwing in the garbage. That's the one I think investors are getting.
Why is that?
Because it's the view, like, taking on debt, OpenAI is not going to be good for their bill. Look, if you look at any OpenAI-related tech stock, from AMD to Microsoft to Oracle, those stocks have sold off significantly. And I think the reality is this is an AI revolution where you're in, we talk about the AI party, it's 10:30, 10:45 p.m. Party goes to 4 a.m., start at 9 p.m. And OpenAI is going to play a huge role in that in the infrastructure build out. So to me, Paul, it's like I think like tech stocks, they're up 25%.
Really? 25 and 2026. But I mean, is that the big names like NVIDIA? Because I think to myself, lots of competition out there for them. First of all, supply chain challenges continue, but you've also got Google and Amazon, big competitors who are playing catch up with NVIDIA. Can it really hold on to that momentum in 2026?
Look, there's only one godfather of AI. He's wearing a black leather jacket. His name's Jensen. And I think, look, they are 5 years ahead of any other competitor. That's why, look, for them, like even their third best chip, restricted H200s,
right,
in China, despite whatever the politics, Baba, JD, Tencent, they want those chips. Because it comes down to like, they are so many years ahead of competition. I think, but look, AMD, that's going to be a major play that we see playing out. And then I think you start to look at like what Google's doing, what Microsoft is doing in this chip world. It's in an AI arms race, but here's the deal. For the first time in 30 years, U.S. is ahead of China when it comes to tech.
How about that?
That is, I think that's really like the most important thing here. That's
and it's getting lost in the sauce, I feel, what you just said.
Well, it is. Because for so many times, like I'd be in Taiwan, 18 hours, seeing like factory fabs, then land in Newark Airport, there's some fist fight at Dunkin' Donuts, and you're like, wow, we are like so behind. Now, switched.
So is OpenAI going to go public in 2026, and is that going to be a seminal event for?
I think early 27.
Okay.
They could file maybe by the late 26, but I think that's the thing. Like SpaceX, you think about Anthropic, you think about OpenAI. Look, the reality is that people talk about bubble. Some of the best companies that haven't even gone public yet, and I think there's a supply demand for big growth names, and that's why, to me, I think investors that are saying it's a bubble, tech's done, they're doing it from the 25th floor of a New York City office building or Metro North, right? I mean, the reality is like for someone like me that sees it globally, sees the demand to supply is 12-1 for NVIDIA chips today in Asia.
But here's the question. Is there enough energy out there to meet that supply? Because that's one of it's the biggest challenge going forward.
Look, if you think like the thing to me that like, if you're just like, what could spoil the AI party? Right. It's not about demand, fourth industrial revolution. It's not about like the use cases. It's energy and regulation. And look, energy, that's why like, you look what's happened on nuclear. You saw the TAE deal with, obviously Trump Media. You saw what Google's doing in terms of them buying their own energy company. I mean, energy is the biggest restriction in the U.S., but I continue to believe like nuclear is going to be the play there.
CES, it's 200, 250, 300,000 people descend on Vegas for it. And it's been going there for 40 years. I've been going to this thing. This one feels like we might get like a seminal announcement coming out of this, whether it's a product, a service, an investment, a deal. It just feels like maybe this CES might be something where something really material pops out of Vegas.
Yeah, I agree. Because like, look, for so many years, CES is like, oh, great, a refrigerator that talks to you, a cool drone. Now it's really become like central to when you think about the AI revolution. I think when you talk about chips, when you look what's coming out of AMD, I think NVIDIA is really going to double down on robotics. I think quantum is another one. If you go back a year ago, that's where Jensen was sort of quantum's like 10, 15 years away. Quantum stock sold up. I actually think there's going to be a lot more bullish when it comes to quantum. And look, I know like half the companies that I know that are going there, they're not officially there. Yeah. Why are they going there? They're not going there to go to the Cosmo or go to the Wynn for dinner. They're going because they're looking for acquisition candidates. I kind of feel like
during CES, if I talk to a CEO, I think my first question is going to be, why are you not in Vegas? Like, I don't care what business you're in. I'm in the paint business.
You're touched by the technology.
Yeah, exactly. But to Paul's point, this isn't just about like consumer gadgets, 100-inch televisions that somehow talk to you. Now it's really become central to like where the technology. Think about the Chinese presence there in terms of XPeng, BYD, everyone else. Mm-hmm. You think about autonomous, robotics, and that's why, like, I think the one thing to stress to anyone listening is like this is AI. It's not just about like ChatGPT. What model do you use? We are now. This is the year Apple dives into deep end of the pool when it comes to AI on the consumer side. We're now going to hit the next level of the AI revolution, but this is a 1996 moment. Not 1999, 2000 bubble moment.
Yes, thankfully. Do we expect a big China presence at this thing, given the relationship right now between the U.S. and China? Okay.
If you're a China tech company, you have to come here. Mm-hmm. I mean, I think like when I think about like the presence last year, that was already significant. This year, it's booming because for them, okay, like they're not going to be able to sell into the U.S. at least currently. But this, for them, it's a flex to muscles on the global stage in terms of them selling South America, Europe, Australia. I mean, because
the world descends upon CES, right?
Because like this is the world event. But to Paul's point, like if you're not there, it's almost like being at a wedding at a table by the kitchen with random people instead of being at like kind of like Paul. He's always like front and center, like he's at the cool table.
Matt Campbell named 17th Penn State head football coach. What do you think?
Look, I think Campbell, like he is the right guy for Penn State. I mean, it's not just that; it's the staff he's going to bring in. He knows how to recruit. I think he's the magic formula. I think now we'll get D'Anton Lynn from USC as a defensive coordinator. This is going to build the stage to what like people will say next year, it's a rebuilding year. I disagree. I think this gets us back into the playoffs next year, and it goes back to the dream for a natty in 27 or 28.
There we go. Penn State, a new cycle there. As Coach Franklin moves on to Virginia Tech, we got the Matt Campbell tenure coming up there at Penn State. And Dan Ives is an alum and very involved in this school. Dan Ives, thanks so much for joining us. He's Senior Tech Analyst at Wedbush Securities, giving us the latest thoughts there. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Let's talk a little geopolitics, because goodness knows there is a bunch of stuff happening all the time. And our next guest says geopolitics is no longer background noise. It is now a core pricing mechanism in global markets. So let's dig in with Patrick Murphy. He is Executive Director of Geopolitical Advisors at Hilco Global. Patrick, thanks so much for being with us. Just an overview here on, right now on the hot seat, we've got Trump talking to Netanyahu, Trump talking to Putin and to Zelensky. How are those big talks playing out in the stock market?
Oh, well, first, Alexis, Paul, thanks for having me on. It's playing big time because, when we look at geopolitics, it's now not just background noise, as you mentioned. It's really a core pricing mechanism out there. So these geopolitical things, especially in the Middle East, when you look at our shipping costs from last year up 300%. Why? Because there were Houthi attacks against the shipping lanes there, especially in the Red Sea. So in those certain routes, shipping costs going up 300%. So, when you say 440% of the world's container traffic comes from that region, that's a big deal. So that's why you saw the United States and UK join forces in what we call Operation Rough Rider to attack the Saudi Houthis there, to put them back on their heels. But it's still a volatile region. So that's why, listen, at the end of 2025, we need to make sure that we are moving the ball forward on hopefully some peace so we can just continue this, economy that's moving in the right direction.
Patrick, you're a young guy, but man, you've done a lot in your life. This dude, Iraq, he served U.S. Army. Okay, so thank you for your service, sir. In Iraq, in Bosnia, 32nd Undersecretary of the Army, not even sure what that means, but it sounds really cool. Served in the U.S. House of Representatives. The dude's had like 3 lives and he's still a young man. Very cool.
Well, I drink a lot of coffee, my friend. I drink a lot of coffee. And,
hey, Patrick, when you talk to corporations out there, executives, did they understand that, they really are impacted by geopolitics? Because I think we as consumers and investors, we learned that the hard way during kind of the pandemic, if you will, because boy, that global supply chain is pretty fragile.
Yeah, no doubt about it. And I think what you're seeing, Paul, is markets are rewarding resilience. You look at the numbers. I'm a numbers guy, right? So 70% of global manufacturing, they're basically like they're saying, hey, we want to make sure that we are increasing onshore or nearshore. Why? Because they want to make sure that, they're moving from just-in-time, basically, inventory models to making sure they're being replaced by hybrid systems. So 60% basically a safety stock, right? Because we saw during COVID, when they were hurting, they weren't able to react and produce for their customers. So that's what Hilco does. We're phenomenal at basically excelling for our clients, where we say, hey, let's make sure that we're doing pricing and repositioning when you look at these geopolitical dislocations, particularly, though, where the public policy collides with private capital. So, we are best in the world at this. I'm excited to be part of this team. I love being part of the Army team, Paul. As you mentioned, I was a soldier in Iraq, professor at West Point, and I was the undersecretary, is basically the COO of the Army, and I was the acting secretary of the Army. But now I'm with the great team at Hilco Global, and as a part-time professor at West Point. I'm sorry, at Wharton now. But it's just an exciting time to be in geopolitics and make sure we're helping our clients, be ahead of the curve.
I like how he just slips in there that he's now a professor at Wharton.
Sure.
You have like 4 careers going on here, Patrick. I'm just curious what you're hearing from your clients and as they look at investments through this geopolitical lens, and what are some of their biggest concerns heading into the new year?
I think they want to make sure that there's certainty out there, right? And I think we all come together as Americans first to make sure that we're speaking in one voice. We used to say politics should end at our water's edge. We know that might be trite and not necessarily the case. And I served in Congress when I came back from Iraq. And I saw in the Pentagon, but there are a lot of folks out there that just want certainty so they can make the right decisions. But Alexis, what you're seeing is that there's a massive public-private partnership. What does that mean? That means like industrial policy is being reshaped out there from chips to ships. What does that mean? That means that you're seeing things like the CHIPS Act, right? Yeah, it was tens of billions of dollars of government investment, but that triggered $300 billion in investment in the semiconductor industry. That's a positive thing, but it's not just in semiconductors, not just with chips, it's also in defense. You saw in this administration, they just passed a bill that is going to provide $200 billion to the Department of Defense, now called the Department of War, to what's called their Office of Strategic Capital, to develop these public-private partnerships. So you're seeing the government put in there, that's, again, $200 billion is over the next 4 years, but then you're seeing JP Morgan Chase say, hey, we're going to make sure we put $1.5 trillion in investment in what they're calling a resiliency and security initiative, where they're making sure that they're ahead of the curve too. Because why? Because in defense, last year, $2.44 trillion in defense spending, right? Where there's this recalibration with, basically world powers to make sure that, they're doing what's necessary to keep their families safe, and they have security goals. NATO specifically, it's all about they're supposed to now hit 3.5% of their GDP in defense spending. Some countries like Germany blowing past 4%. So you're seeing this real calibration going on, and it's exciting to be part of it. And that's what our clients want. They want the data that's going to affect their bottom line. It's going to affect their customers to make sure they're ahead of the curve and not sleep at the wheel.
Patrick, we've seen some movement towards nearshoring, friendshoring, onshoring, all that type of stuff of various parts of the economy. Does that signal that globalization is dead?
I wouldn't say it's dead. I think we had an era of globalization, and now we have an era of basically strategic, I would say, fragmentation, where you're having a clear alignment with countries that are aligned with their values toward each other, and I think you're going to see that, moving forward, and that's why they're protecting, basically the supply channels out there. I already mentioned that shipping container routes, especially dealing with the Red Sea and the Suez Canal, but I think you're also seeing it on making sure that they're really evaluating the market, specifically really valuing, Paul, the basically resiliency that we haven't seen before, because they understand that things could change on a dime. And I think that's where at Hilco we really excel on that, the pricing and repositioning amid these geopolitical dislocations that we're seeing out there. And so, and it's not partisan, Paul. I mean, because you saw under President Biden about 16 million new jobs in his 4 years, but 1.5 million jobs in manufacturing. And you're seeing President Trump now double down on American manufacturing. And, I think it's going to be here to stay, moving forward.
Yep. All right, Patrick, thank you so much for joining us. Really appreciate it. Patrick Murphy, he's the Executive Director, Geopolitical Advisors. The firm is Hilco Global. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Alonso Munoz joins us here, Chief Investment Officer, Hamilton Capital Partners. Alonso, you sit down with your clients here and you say, boy, we had a good 2025. Stocks are up 15, 20%. High single-digit returns on your fixed income investments. Commodities have been ripping, like we just mentioned, gold and silver. What's the conversation for 2026 with your clients?
Good morning, Paul. Good to be here. Cancel the markets. Close everything. We're done. No, look, I think we have to be sanguine about the fact that there may be some volatility next year. We have some big catalysts that we're looking forward to, like Fed policy, Fed rate cuts maybe in January, maybe not. A lot of the expectations are that the Fed's now going to pull back. We're looking at the Supreme Court and what they do with tariffs. I think that's a big deal. And so I think we're going to be, really open to next year. We're keeping a little bit of cash on hand, but we're going to stay on the AI trade. I think that's what we're going to do going into next year.
So you're staying on the AI train, as you said in your note. But if you're also holding on to some dry powder, where are you looking for those other opportunities? Where might they be?
Alexis, I think what we've been doing, and our thought logic going into next year, is to buy the back end of the yield curve, of the U.S. Treasury curve, just to lock in some of those rates for clients. We expect that rates will start to come down maybe next year. We saw that the unemployment rate moved up to 4.6. So there's a balance on, hey, everything's great. GDP was really strong. There's a lot of money flowing into this market with there are a lot of folks struggling out there too. The unemployment rate is rising. The Fed is backed into a corner. Jerome Powell is on his way out. So we're thinking about a lot of things. For us right now, it's lock in some of these rates, put in a simple hedge, and go into next year, although, with some risk, with a lot of optimism as well.
I see, some of your core holdings at your firm, Google, Tesla, Meta. We're going to have the biggest supporter, arguably, on the sell side of those types of names, Dan Ives, coming in a little bit later here this morning here. Those stocks have been such good performers over the years. What gives you conviction to stay with them as opposed to maybe rotate into some other areas?
Well, we're always looking forward. I mean, we don't like to look backwards, but if you haven't owned the Mega Cap 7 or the Mag 7, we used to call them FANG, you've missed out on tremendous returns. And I think for the everyday investor, for folks that are accumulating wealth, you have to be in these names, these leaders that have led in the past but are leading into the future as well. We saw the acquisition announcement this morning from Meta. Big deal. And I think going forward, we have an administration that has been friendly to these companies, and you see these the principals of these firms cozying up to the president. We like to allocate capital where the capital is flowing, and we think that trade continues.
Yeah. Of course, when Facebook turned over to Meta, it kind of screwed up the whole FANG acronym. And then more companies were added, right, as well. So we have the Mag 7. I want to talk a minute about the bond market, because there's a lot of talk about the steepening of the yield curve. Does that, if you are buying into that's going to happen next year, does that imply that inflation might be a problem? And then doesn't that sort of throw a juggernaut into all of it?
Well, I think to your point, the Fed has primed us to watch every single data point basically every day. And so we're glued to our screens. I think as we go into next year, what we're seeing is inflation not coming down specifically to that 2% target. The economy's doing really well. The Fed is cutting rates, but the back end of the yield curve has been pushing higher. So we start to look at the risk, which are, the deficit, government spending, the shutdown, the tariff risk. I mean, there's a lot out there that could drive that back into the yield curve higher. For us, however, locking in some of those rates, potentially putting in a very simple hedge. We know that the 10 to 20 year traditionally does well when markets push lower, when the momentum shifts to the downside. So for us, we kind of have a barbell approach. We're locking in some good yields. There's a lot of cash in money markets, $7+ trillion in money markets. Right. So where does that money go as rates go down into the low 3s, high 2s?
Alternatives. What are your clients? How much exposure do they want to alternatives? And then what's that discussion like with your clients?
Well, I think it's difficult because these big asset managers, the alternative asset managers, have made a huge push to bring this to 401ks, to the everyday investor. And they come with risk, lack of liquidity, client sophistication on understanding these products. But we've had a lot of conversations. We've actually been in private credit for some time. And we think that trade continues. And if anything, it's coming to 401ks. It's coming to the everyday investor in the form of ETFs. We've seen tremendous amounts of ETFs launched with these products in them. I think we'll have to wait and see how this plays out at the retail investor level.
You talk about hedging. A lot of folks see the precious metals as a hedge, and lately they've been acting more like meme stocks. So what do you do with precious metals? Because some thought, yesterday's biggest drop in silver in 5 years was more than just a bit of a correction. It was like, we're going to reset, and maybe we're not going higher here.
That's right. I laugh. I think the gold bugs were finally right. Everyone that told us to buy gold. No, when we talk to investors about commodities have always had a place in a portfolio, typically 5 to 10%, as you guys have talked about. But we also warn folks that when we chase these trends, just like 2021, whether it's meme stocks or technology stocks, or in this case, gold and silver, it can lead to bad outcomes for investors that aren't willing to hold these positions for long term. So it is fun to see. It is sort of fun in conversation. And I think there's a global supply-demand dynamic at play here for gold and for silver and for some of these rare earth minerals, copper, that are inputs to data centers, to chips, to all these things that we're talking about that are exciting about the AI trade.
So we've had, I would say, really good earnings environment supporting stocks and bonds. Do you think earnings are going to continue to be strong enough to support these markets here?
So we think that earnings are going to be good. I think the bar continues to be pushed so high that when companies don't absolutely smoke earnings, you see really big price reaction. And I know you guys maybe will remember this. Prior to COVID, if we had a up down 1.5% in the market at the broad index, we would all freak out. Now it's just a normal Monday, normal Tuesday. So we're looking at that volatility. I think going into next year, we're just open to the fact that earnings will be good, but we could see some broader volatility, specifically within these names that have been hot for the last year.
And it really has been. Good is just not good enough, especially when you're talking about some specific names. It's been like that for a while now. What about IPO market, M&A? Lots of folks we're talking to seem bullish in those two areas.
We're very much so. I mean, banks, a lot of bank mergers this year. I mean, we've seen some really big sort of flashy IPOs and M&As announced this year, and we think that continues. The market was basically frozen for 2 years, when the Fed was in their rate hiking cycle. So this is sort of a reopening, a breath of fresh air to see some of these deals take place and hopefully a lot of money to be made.
You're based down in Atlanta?
Atlanta, Georgia.
I'm just going to guess. Watch this.
Okay.
I'm just going to guess without even asking Peachtree.
We're on Peachtree Road.
There you go.
So
there
good,
you go.
Paul.
What are your clients asking you these days? What's the biggest concern for them these days?
I think that a lot of clients are wondering when rates are going to come down. A lot of folks still have mortgages, they have credit cards, they have auto loans. And what we're seeing, and part of that dynamic is the economy is great and the Fed's cutting rates, but that back end of the yield curve is sort of anchored in the low fours, mid fours. So we're talking a lot about estate planning. We're talking a lot about how to allocate fresh capital with markets at all-time highs. We're talking a lot about gold and how to melt gold and sell gold. And but they're exciting conversations, and a lot of people have done really well in the market, and so looking to rebalance in the new year, maybe get some exposure out of tech to financials and healthcare sectors that haven't done, specifically as well as technology and consumer discretionary.
Alonso, thank you so much for joining us. Really appreciate it. Alonso Munoz, he's the Chief Investment Officer, Hamilton Capital Partners. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
It's an election year. That has a lot of ramifications for a lot of parts of this economy and this markets. And what does it mean for Republicans, Democrats, and investors coming up? Our Gautam Mukunda joins us here, Lecturer of Management Practice at the Yale School of Management. He's also now a Bloomberg opinion contributor here. So, we got the midterm elections here. Typically, Gautam, the party that's not in the White House tends to do better in these midterm elections. Yep. I'm hearing reporting that may occur this time as well. How do you guys see it?
No, I think that's right. And that's the general tendency. And you got to layer onto that two other things. One is that Donald Trump is historically unpopular. He's essentially never broken 50% other than a week here and there. But he's really unpopular now. Depending on the poll, you're looking at somewhere between 36 and 41. Those are all bad numbers.
Okay.
So when you have a particularly unpopular president, it's going to do worse. And the second is Donald Trump's sort of secret sauce in politics, and it is extraordinary, let's be clear, is his ability to get people who do not normally vote to show up and vote for him. Right? We just see this at a scale that's remarkable. You saw in Michigan, you actually saw where the Democratic senator won because 30,000 Trump voters voted for Trump and left the rest of the ballot blank. Right? So that doesn't work in midterms when he is not on the ballot. And so that puts the Republicans in an even worse situation. Right now, what I'd say is and I think there are Republican Congress people, and I've heard this from some who are really concerned, they are right at the edge where the gerrymanders set up to protect their districts are going to start to look weak. If Trump drops another 3, 4, 5 points, you're going to start to see incumbents who thought they were essentially asleep at the switch, or never, would have to die before they lost re-election, right?
Right.
Are going to be in trouble, and then you'll see a big shift in political dynamics.
So, are we already seeing those folks distance themselves or try to distance themselves from the president? I mean, they're sort of in a no-win situation, right?
They are. The extent of personal control that he exercises over the party and the kind of ruthless way he goes after people who break from him, as Marjorie Taylor Greene has experienced, there just isn't a precedent in American history for that. This is just a new phenomenon. But but at some point, they're going to start worrying about winning re-election, and they're going to start saying, well, maybe the primary isn't the only thing I have to worry about. I don't think you're seeing distancing yet, and I'm actually pretty skeptical you will. We've seen so much turnover in the Republican Party that a lot of these people are either genuinely true believer or purely cynical, right? Like they're kind of one or the other. What you are, I think, likely to see is more retirements. And, there are all these rumors that you're going to see people retiring during the term enough that Mike Johnson might actually lose the speakership. I don't think that'll happen because the level of essentially fear that they will put into anyone to do that is going to be extraordinary. But the fact that people are even talking about it is not something I've ever seen.
You could see mass retirements is what you're saying in Congress.
That being said, to the extent that the Republican Party is weakening around the edges as Trump's administration ages here, again, I have to ask the question, where are the Democrats? Who's leading the charge here? It can't be Chuck Schumer.
No, I think the extent of the generational shift that's hitting the Democratic Party is profound. And this is going to have long-lasting effects in American politics. This is not just going to be this election cycle. You are seeing a new sort of generation of Democrats who basically, I think the way they would put it is they want to play the game the way the Republicans do, right? And which means that they are not as interested in compromise. They are not as interested in blanking. Whether or not you agree with that assessment, that's how they think about it. And that shift is going to be pretty. When you have two parties who are willing to go to the edge, that is very different than having one party that's willing to go to the edge. And so that is going to happen. But Paul, as you know, you ask me this question every time I'm on, and I tell you the same answer. It's still early.
Okay.
The way the leadership of the party is going to evolve is the primaries, and we're not going to start the primaries till after the midterm elections. You're starting to see people jockey. You're starting to see people have success. I mean, Gavin Newsom. I would not have predicted that parodying Donald Trump's voice on Twitter would be a successful political tactic, but it turns out it really works for him. And you're seeing a bunch of other people who are similarly, making waves, making noise that you're starting to see, okay, the Democratic problem in the primaries as opposed to now, right, where all anybody cares about is the midterm. But when the primaries roll around it's not going to be a lack of people, it's going to be too many. That there are just so many plausible candidates. So I'm not saying any of these people would be a great president or not, but if Gavin Newsom or Josh Shapiro or Wes Moore or Corey, there's a lot of people in the Democratic Party who you look at and go, that's a plausible president. And that, there's sort of an embarrassment of riches problem that they might have to deal with there.
Well, something that's going to be happening before the midterms, of course, is the deadline for another government shutdown.
Yes.
And the crux of the first government shutdown is still the problem, which is no agreement on health care.
Yeah.
Do you think they're going to take it to the mat and then we're going to avoid, or could we be entering yet another historic shutdown at the end of January?
I mean, I think there's a chance that we'll avoid another shutdown just because one of the big underlying driving factors for the last shutdown was the Epstein files. And, mad as that seems, it's quite clear that the House was held out of session to delay that vote on the files. Since that vote has taken place, that factor is out. And I think everybody's kind of looking at the last one and being that didn't work, right? Like the Democrats who did it, even if they got what they wanted out of it, it doesn't feel that way because there's so much internal pressure against it. The Republicans, this is just a nightmare. But the other big driving dynamic, and this I don't know how they're going to get out of it, is really simple. If premiums skyrocket the way that it looks they are doing and it looks like they're going to, that is a political disaster for the Republican Party, which owns the issue in that way. They're asking but to fix it, almost all the votes will be Democrats. The policy incentives, which are to fix the problem, and the political incentives, which are for Democrats to say, hey guys, congratulations, you own this. Those run in completely opposite directions, and the closer we get to the midterms, the more the political incentives are going to swamp the policy ones.
Post-midterms, to what extent is President Trump effectively a lame duck?
I mean, he was a lame duck from the moment he got sworn in, right? But what has stopped that from happening is, again, this incredible personalist control over the party. That is, again, like Franklin Roosevelt in his wildest dreams did not have anything like this. Right. And so if the midterms are a bloodbath for the Republicans, and much of that just depends on the economy, right? Like if AI keeps the economy afloat through November, then they're going to lose seats, but they may not lose 60 seats. They may lose 20. But if the midterms are a bloodbath for the Republicans, then I think you're going to see some pretty high level of panic setting in, because especially if the economy turns between now and 28, which I'm not making any predictions, just we've had a long run without that, so that wouldn't shock anybody. You're going to see some Republicans who are pretty panicked and who are not going to feel all that comfortable, say, riding the banner of J.D. Vance in the same way. In
30 seconds or less, do we get a deal, Ukraine and Russia?
No, we're not. The deal would have to be the Russians essentially withdraw from Ukraine, because the Ukrainians are pretty clear they're going to keep fighting. And as long as they're going to keep fighting, and as long as Putin wants to conquer Ukraine, which is essentially still what he's saying, there's not going to be a deal. The sort of Trump administration's decision to side with Russia in this war and put pressure on Ukraine is, just one, as a matter of national interest and national honor, horrifying. Right. But even setting that aside, what it's demonstrated is that the Ukrainians can keep fighting without us and fight well, and they know it.
All right, Gautam, thank you so much for joining us. Gautam Mukunda, lecturer of management practice at the Yale School of Management, also a Bloomberg opinion contributor.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.